Hey, what's up, everybody? It's Eric coming back at you here with another video on this Monday series here. Guys, I wanted to talk to you today and clear up any questions that you guys had about earnest money deposits or any like upfront or out of pocket expenses that you're going to incur throughout the home buying process. Really, there's not much to this, guys. There's not a whole lot that comes out of your pocket directly. Most of it is going to be paid, at the settlement table when you wire the money to the title company. But guys, really want to talk to you and clear up earnest money deposits. And also, one more upfront expense you're going to have. The earnest money deposit, the first one, right? The earnest money deposit is applied to your down payment and closing costs, okay? But it's important to note that the money is going to be taken out of your bank account and held in escrow, which means, basically by a neutral third party. Most of the time, it's going to be the title company, but it's going to be held in escrow, while we're under contract, right? So, what is an earnest money deposit? An earnest money deposit is basically exactly what the word earnest means, right? It means, operating out of good faith. So we're going to put this earnest money deposit down so the seller knows that, hey, we're operating in good faith here. We are going to give you, usually the earnest money deposit is about 1% of the purchase price. So if you're buying a $400,000 house, you'll say, hey, Mr. and Mrs. Seller, here's a $4,000 or $5,000 check that's going to be held in escrow that shows that we are going to operate in good faith throughout this transaction because we want to buy your house, right? So it gives the seller a little bit more incentive to, move forward with the offer. Technically, it's not required, but I mean, you're pretty much not going to be able to get an offer accepted without an earnest money deposit. So that is, definitely a big thing. And I just want to make sure that you guys are aware, right, that the money does come out of your bank account, right, basically within 3 days of you going under contract. So I've had some buyers in the past that were a little bit confused about that, but it is important to note that that money also gets applied to your down payment or closing costs. So it's not like, you're cutting a separate check to the seller or to me or the title company. So it does get applied. So that's good. And guys, the only other upfront expense or out-of-pocket expense that you're going to incur before settlement is just your inspection costs. So, guys, you just treat the inspector just like a normal vendor, and you pay them on the spot or through their website or however they want to do it, depending on the company. But usually an inspection is going to cost anywhere. It depends on the size of the house, but it's going to cost anywhere from about $350 to maybe $550, somewhere in that range. So yeah, guys, that's about it. Everything else is paid at closing, and I did a whole separate video on what closing costs look like. So you guys should know now that usually about closing costs are 3%, and your down payment is a minimum of 3%. You're looking at probably 6% of the purchase price for closing costs. So just wanted to clear that up for you guys. I know there's probably some questions about that, and just wanted to make everyone aware of it. So if you guys have any questions in this ever-changing market that we're in right now, please do not hesitate to call me, text me, private message me, whatever you guys want to do. But other than that, guys, I will see you in 2 Mondays from now, and you all have a good week. Peace.